think we are live.
I say we jump right into it. I think we have a lot to cover with this topic.
Yeah, you had a lot of people talk about this on Facebook. I did not look at the comments, but you asked yesterday. Yeah.
Yeah. So people, how would we put it? I mean, we could say people hate the thought of going through the mortgage process. We could say they're really nervous to go through the mortgage process. Dread could be a word. All of those,
maybe.
Yeah.
All those things, yeah. So
I don't think anyone's like happy or positive or excited about the process, probably.
Yeah. And that's understandable to me because it's not like that part is not exciting or fun. Nobody gets excited to dig up their pay stubs and their W-2s and their tax returns and scan them to us. Like, I've never heard anyone say that was like the best time I ever had in my life. It was so amazing or anything like along those lines. Although we do get positive feedback because I think people expect it to be bad. And over time, we have built a process that is pretty darn good. But let's see. So I tasked us with coming up with reasons why we think people hate the process. So who wants to start? I just jotted down kind of like the top 5 or 10 things that came to my head when I said that.
Yeah. The first one that came to mind for me was too much documentation.
Yeah.
Because sometimes the list is short for someone, but depending on their situation, it could be a lengthy list of items we need to see.
Yeah. So the documentation part isn't fun. I think many people feel that they're not that organized too. So it's just like kind of daunting. Some people are very organized. And I think we find that when we have those people, it's really obvious. But too much paperwork. So yeah, that's a tough one. So the standard at the minimum is it depends on your type of employment. So it's all so specific. Hi, Sarah. So 2 pay stubs, it's like 2, 2, and 2 would be like the simplest file we have. 2 pay stubs, 2 W-2s, two full bank statements for the past 2 months. That's like the minimum general documentation. And then over and above that, all buyers have to set up some form of homeowners insurance. Usually not that simple. Mortgages are a lot like surgery, I like to say, because you just don't know what you're going to get yourself into once you start to look at documents. And I think that's where people get frustrated because we didn't say the whole list we needed at the beginning, maybe. And a lot of times that's because of a couple things. Sometimes people get overwhelmed when we ask for 12 things at one time. So we try to keep it short at the beginning. We don't want people overwhelmed. So we take it like step by step. Also, if you give us, let's say, trying to think of a good example here. Anything could come up really in the process. And that is why it is a process. It's 30 days. So I think one thing to really think on is, so getting a mortgage is not a right. We have to make sure you qualify. And I think people lose sight of this a lot. And I talk about it often, but it's not a right. You have to qualify. We have to make sure you have an ability to repay and that you have a willingness to repay based on all of your behavior that we can gather over the course of the process. So some things we ask directly are not disclosed that we find out later, and then we have to circle back around and try to fix them. But being thorough at the beginning is extremely important for any mortgage professional to help their buyers have the smoothest process possible. Anything else we should say on too much documentation?
Yeah, I think it's just good to set the expectation that you're probably, I think no one's ever done with providing documentation at the time of pre-approval, just because I think it's good to set the expectation that as your loan process goes on, we will ask for more things. And like you said, it's maybe things that there wasn't a reason to ask for early on. But like, as an example, sometimes people will, maybe they're a few weeks from closing on their house, and then someone transfers a really large amount of money into their bank account that maybe wasn't there at the time of their pre-approval. And so things will pop up that then, well, now we need to document where those funds came from, and so just kind of expecting that will come up. Extra things will be needed, and it is frustrating, and we get that. But there is, like you said, a mortgage is not just a right, we have reasons for asking for every single thing we ask for, just to document everything's legal, good standing, all of that. So that's what I would say.
Yeah, I agree. There was a point I was going to make when you were talking, but it may have
it'll come back if it's meant to be. Also, hi to Sarah and Sheila, and thank you, Sheila, for sharing our video.
What did you have on your list, Carly?
So mine kind of piggybacks off the documentation and the frustration. I think some people can find it a little bit invasive, because we are going through, your credit history and your bank statements, and that can be a little bit, I think, scary for people because they just don't understand it and they don't understand the why. And again, it kind of goes off of that, like if there's a deposit, we just need to track where it came from, make sure it's legitimate and things of that nature. I also think something that scares people is like they're just lack of knowledge about the mortgage process. They don't know what to expect, really. Mm-hmm. Some people just apply and expect to be pre-approved very quickly. And sometimes, it takes a minute to nail down, what you can afford and why.
One thing I was going to say, back to the too much documentation, because it came back. So what outsiders don't realize is that people change their source of funds at the last minute. So where they tell us that they are getting it from their 401k and we clearly see that they have it in there, at the last minute they do something totally different. And source of funds matter because it all has to be documented where the original source was, and we have to make sure that it's legal use of funds towards a mortgage. A mortgage is a government type of product, so we have to follow laws. And so we oftentimes deal with people at the last minute change where they're getting their money from. And sometimes it can change their entire approval. So like if they're getting a gift and it was coming from their 401k before, it is now not their own fund. So it is a riskier loan. It's an additional layer of risk. So it's easy to say that the mortgage process sucks from the outside, but we really do deal with a lot of moving and changing parts as we go. So we do our best to prepare our clients and be very upfront and honest. And then sometimes we're just dealt it's the people change things up on us at the last minute, and we have to adjust to that and keep things on track and all of that type of thing. So very important to point that out. Along the lines of documentation, I also want to mention that you said it, Grace. So your pre-approval is a general overview of what you're approved for. We've reviewed your credit. We've reviewed credit. We've reviewed income, done a thorough income calculation, and have reviewed the documents that you have gotten to us. So hopefully, typically it would be bank statements as well. And we get pushed a lot to issue pre-approvals before we have everything. And usually we're waiting on the client because we're ready to go. But clients don't always have all the information we need, and they're not able to get it to us in 2 hours. Like, it takes them a week to get it to us, but yet they want to make an offer. So think of how, like, kind of think about like where we're coming from too. And the other thing is that this industry cannot fully come up with a commitment to lend with every borrower that applies. The statistics are that about 15% of people that apply and are approved will actually go under contract. So could you imagine the wasted resources is if we went and got a mortgage commitment for every single buyer that inquired? So a lot of it is resource management and efficiency in that way that people I just don't think understand. What's next?
Yeah, so another one I had, you touched on it, but I would say people don't want their credit pulled or looked into. That is kind of, like Carly said, invasive. I thought was a good word.
Yeah.
It's also, it is, you have, I guess, would you say in every pre-approval case, it has to be a hard inquiry? I know we can do soft inquiries, but for a full pre-approval, it is always a hard inquiry.
I like it to be a hard inquiry, and here's the reason why, because things can change from the time. So if we get a hard inquiry on file, we do not have to review that credit again for 120 days. So typically, if we have a motivated buyer and they can put all the pieces of the puzzle together, we do not have to review that again for 120 days. And we are pretty good at assessing that. So if we do a soft pull and have a score, and then we cannot use a soft pull to complete a mortgage transaction if they've changed anything since the soft pull, the changes could affect our process. So I tend to lean towards the hard pull at the beginning so that we know exactly what we're dealing with.
Yeah, so that is scary for people sometimes. I think even when we got pre-approved, my husband and I didn't know what my credit score was. I kind of had an idea from like a banking app that I have, but you don't really know until it's actually pulled. So I think there's some anxiety for people in that, which I think is understandable.
Definitely. I mean, I do this business and I was nervous to apply for a mortgage, last year. So we definitely understand where you're coming from, all of us, because it is it feels like an invasion of privacy, but also from the other end, think of who would you lend $300, $400, $500, $600,000 to? So we have to know the scoop. It's important. So, and then back with the credit, people, one of the biggest things people say is like, is it a hard inquiry? And they're really worried it's going to affect their score. So this is something that comes up day in and day out. And the thing about a hard inquiry is that it has very little effect on your score. Now, your Credit Karma is going to tell you that your score declined because of a credit inquiry, but Credit Karma is not a credit reporting agency. They are a marketing agency. So they have the information and they use it to their advantage to market products. But if you have a mortgage inquiry and it's a hard inquiry, which is what people are so concerned about, it's going to have a nominal effect on your score. Now, what does have an effect on your score is if you apply for a ton of different credit over a short amount of time. So a mortgage today, a car 3 days from now, 2 credit cards next week, an installment loan the following week, a personal loan the following week, that is going to tank your score so fast. So that is a misconception out in the marketplace that a hard inquiry is like super terrible. Most people that are going to apply for a mortgage don't really have intentions to just open up a bunch of credit, and nor should they. So it should not affect your score. If it does, it would be in a very nominal way.
Right.
What else do we have?
Carly, do you have another?
Mine was going to be the credit. I just think it's
twins. Carly and I
know. We didn't even go over this before either.
I I wrote down fear of not qualifying, which
Yep.
we did talk about, and that is a fear that a lot of people have. One thing that especially first-time buyers say to me when I first get on the phone with them is, "I'm so nervous." And we understand that, and we're gonna, we try to help you feel less nervous, and try to give you that support that, you may not qualify right now, but we have a system set up in place that if you don't qualify right now, we are going to give you the next 3 steps to get in line so that you can qualify faster. And then if there's more than 3 steps, then after you complete the first 3 steps, then we'll go to the next phase and give you the next 3 steps. So everyone's at different stages of life. Credit integrity is important, but people have things that happen to them that affect their credit, and we understand that. So we will do everything we can to be empathetic and help you get to that point where you qualify to purchase a home.
Yes. Yeah.
We call that our Mortgage Ready program. So that's a special program that we have if you're committed and motivated to become a qualified home buyer and you don't qualify immediately, then we will help you take steps to get there.
And we have done that for people very recently who started just a couple months ago who were maybe not qualified for what they thought they were, and then we got them there just by them following those couple steps. So it's important not to get discouraged, which I think some people do during this process because they thought, they could afford a 350, but they're more in the 275. But if you put in the work, you can get where you need to be.
Kind of going off of something you said made me think of this, is that I think probably when people get pre-approved, they think they are totally good to go. Like, we are set. We basically have the house, And I think I didn't know this until I worked in the mortgage industry, but, you get pre-approved and that it is what it is. It's pre-approval, it looks like you will get approved for your loan. But then once you go under contract and you sign your initial mortgage disclosures and your whole credit package, they call it. So like your credit report, all your documentation, your application, it all goes to an underwriter. And the underwriter is the one who will approve your loan, so you've got your pre-approval and then it goes to an underwriter to be approved or conditionally approved, they would say at that time, because the underwriter is going to probably, in most cases, come up with some conditions you have to meet in order to, clear you for that loan. And so there is like a flow to it and I think that is kind of an anxiety inducing thing, is that there are stages to get like between your pre-approval and closing on your house. And so I think that is another expectation that's helpful to set, that this is going to be kind of a journey and we're going to walk you through it. We're going to help you meet those conditions, get in the documentation that we need to show the underwriter. But that's what I'm currently experiencing with our loan, is that, there are stages. So like when when our loan came out of initial underwriting, so it's first kind of go through the underwriter, they needed verifications of employment for each of our jobs. And that even just gave me a little anxiety. I'm like, wait, why do you need to verify that we make the amount we, gave you pay stubs for and W-2s for? Which I'm really familiar with that because we deal with that every day. But when it's for me, I'm like, oh, is the verification of employment going to come back, the way that I think it will? And so, yeah, just expecting stages of it. And then like I said, we're a support team for you to kind of like help you navigate those conditions and all. So yeah, I just wanted to add that.
I wrote a couple things down as you were speaking. So we are very good at pre-underwriting files and knowing what the underwriter probably will ask for. So, for instance, we try to ask all the questions at the time of application. Not that we always get the correct information, which is why validation is so important. We had a borrower the other day who was very inaccurate with his information. And that's why we have to look at pay stubs. The person said that they made a higher base salary than they did. I clearly asked, did they have a bankruptcy in the past 7 years? They said no, they did. It was in the past 5 years. They didn't even say they had a bankruptcy at all. The other thing is like, if when we're asking all these questions, this particular person had said that he did have a past, not a past, he did have a tax repayment plan. So he owes the IRS money. So if we don't know that ahead of time, that could be something that could be found out in the middle of the transaction, and potentially, we call it kill the deal. But he told me that he had a payment plan, and he told me what the monthly amount was. So we don't just sit with that and say like, okay, he has a tax payment plan. Like, we ask for the documentation of the tax payment plan so that we can look at it in advance. Now, do they always get it to us in a reasonable amount of time? No, they don't. People don't. So that's what we're dealing with on the mortgage end. But that was one thing. And then being proactive, and I actually think I covered it all. So as a good mortgage team, we are considered loan originators. So loan origination actually means starting a loan and closing a loan. That's a mortgage origination company. After that is like the servicing end. But at the front end, we're doing pre-approvals, and I totally forget. I lost my train of thought.
No, but it's it brings up a good point too, that like all of the people that a loan goes through, and all of the systems that a loan goes through, start to finish, they will learn everything about you. So like, if you have anything that you think we should know, or even that you think maybe we don't need to know, it's like, you should just say it, because we will find out probably, in some way or another. This has happened
technology
recently.
that the mortgage lending industry has now is like, I compare it to like the FBI, because you can't get anything by anyone. Back in the day, we didn't have technology. So like, if we asked if you had any other properties that you own, you could say no, and maybe we wouldn't find out. But these days, you can't like get anything by an underwriter. We had that come up. Somebody didn't disclose a property he owned because he didn't think it would come up, because it was not a mortgage on the credit report. And that came back to bite him, for sure. So full disclosure is a good thing. Now, we're trying to find a way to help you get approved. So keeping things from us is not a good idea, because it's only gonna, we might say you're pre-approved at the beginning, and then you're gonna end up in a jam in the middle once you're under contract if you withhold too much vital information. Now, if you tell us other things that are trivial, we can assess what's important to address and what's not. So definitely, you want to be upfront and open with your loan officer.
Just an example of like how thorough they are, an underwriter is. You could give us your pay stubs and your W-2s, but that doesn't mean you really still have a job there. Technically it could look like that from the documentation, but so in order to like verify that you still have a job there when you're closing on your loan, first they're going to have like a written verification of employment that your employer has to fill out in a lot of cases, and then also 10 days away from your loan closing, they're going to call your employer, to get a verbal verification that you're still employed there. So there's a lot set up in there just to make sure, even simple things like, do you still have your job and you still make the same amount of money? It is thorough.
And fraud prevention, because believe it or not, a ton of people create false pay stubs like that don't even exist, and W-2s. So there's multiple ways to manage risk throughout the process. And the risk is to the lender, because it's their money. Like, let's think about it. It's not your money. You put $20,000 down and they're lending $600,000. I'm exaggerating, but that's how it is. It's the lender's money, and it's their investment. And people, I think, lose sight of that. So it's important that we constantly bring it back around. Now, do we want to provide a good service and a great process? Yes, we do. And we do. We want to help as many people as we can. And we want to do it in the right way. But people do not have the right to have a mortgage. They have to qualify.
Sarah has a good question. She says, my job uses the work number to verify employment. Does that affect the mortgage?
We use the work number oftentimes if they have updated information on the work number. Oftentimes that can serve as a written verification of mortgage, which is something that we have to have with someone that is W-2. So, like not self-employed or a contractor. What else do we have here? Last minute fire drill.
Yeah.
I call that. That's a big one. That comes down to me, effective file management. So I think if you are working with a loan officer that values offering a smooth process and works on referral and really has high standards, they're going to be working to build a process where there's the least amount of last minute fire drills as possible. Now, they are not all preventable, but we take a stab at doing a really good job with that. Now, let's talk about why are they not all preventable? Like, what things come up? Oh, I know. So at the last minute, this came to me. There is a credit monitoring system. So a lot of things are verified at the last minute by design. So this is a big piece. Lenders want to know that as close to closing as possible, they have verified, again, that you have the ability and willingness to repay. So they do a couple things. They do a verbal verification of employment, and it can be anywhere from the day of closing to 10 days out to further out, but they want to do it very close to your closing date. So if you quit your job 2 days prior to closing, you can expect you're going to have problems. Or if you quit it 10 days prior to closing, or even if you got a loan commitment, they can call at any time. So that's a thing. So would that be a last minute fire drill? Yes, absolutely it would. We would have to try to get a co-borrower, a spouse, anyone that can help them buy the house. Another big thing that we see, which we communicate over and over, they do a credit monitoring system, and they won't pull this report until like 3 days before closing, because they want to make sure that they've closed that gap so much between closing and when they do this report that there's a very low chance of you having opened another line of credit, which then can make you not able to be qualified for this mortgage. So if you bought a truck, if you bought furniture, any of those things, that's going to be a last minute fire drill. Even if you still qualify, we have to go and get all this other documentation to document that you still qualify. So these are the things that we deal with on the mortgage side that makes like the mortgage industry seem, I don't know, what would the word be? Disorganized, not giving good service, all of those things. And it's really oftentimes not the fault of the mortgage side of it.
It's kind of like we really do try to do as much upfront work as we can, but that just even if we did all the upfront work, things can still pop up, This is kind of a funny example of the credit monitoring. I had a file last year where we were within a few days of closing, maybe like 2 days, and they ran the credit report again, or the supplement.
Credit monitoring
report. That's what it was. And they, something came up, and I reached out to the borrower and asked what this was, and she said, I just went to the dentist and I went to see if I could qualify for Invisalign, but like the braces. She's like, but I didn't move forward with it. But even the fact that she went and just looked to see if she was qualified for braces, like that popped up and was a concern to the lender. So it seems like such a small thing, but it'll show up.
So we try to over communicate as much as possible to not do any of these things. We say it, we we text it, we email it. We have to rely on people to open their email and read it for it to be effective, but we try to over communicate it through the process. Trying to think what else. So also there are some like specialty programs which cause the process to be a little more, I would say a little more frustrating. So anytime you're doing like a mortgage product outside of just like the typical 30-year fixed mortgage with W-2 borrowers, like a renovation loan or like a bank statement loan, you can expect. Oh, that's a good question, Stacey. I want to get to that one. You can expect, what was I saying? I obviously can't do two things at one time. You can expect just probably a higher level of frustration because it's usually a riskier loan. So they're going to do even more due diligence, ask more questions, want more explanations, all those types of things. Renovation loans in particular are like, those feel like you're running in circles because the numbers are changing during the whole process because you're getting like quotes in and estimates for the renovation project, and we're relying on a contractor who's typically not good with paperwork to get us what we need, and usually they do it wrong the first 3 times, so we're asking again and again and again. So any type of product that's like outside of the just like vanilla, I call it, type of loan can be a higher level of frustration. But when I know that, I say that. So I tell people like a renovation loan is a highly frustrating process. As long as you're in, I'm in, but you have to know that up front, you know? So I really try to be direct like that. Okay. So this is a good one. Why does the processor ask for the same items that have already been sent to the lender? So this could be a couple of things. It could be where the borrower actually thinks they sent something and it wasn't exactly what we asked for. So that happens a lot. So it's like a misunderstanding of what was asked for, and they thought they gave it to us, but it was something different than what we actually asked for. So that happens. Sometimes it is just an overlap in the document getting where it needs to go in time. So like if somebody texted it to me, but it came out of underwriting quickly, and my processor was super quick at getting the list together, and I still had it in my text because they didn't like upload it to the portal or something, then she might ask again and not know that I had it because honestly it went too fast at that point, or wires got crossed. So we also deal a lot with people who like they're not computer savvy. They don't want to upload to the portal because they don't know how. So like we're collecting documents in any way, shape, or form that they can get them to us. So it can be very like convoluted. It can get like disorganized. Ultimately, in a perfect world, everyone would know how to download and upload to a portal. But unfortunately, we deal with such a wide range of generations that not everyone's comfortable with that. So things like that can happen. What are some other reasons? Sometimes it could be like that we have 2 pay stubs when we got pre-approved, but now it's 70 days later and they're old because pay stubs have to be within a certain amount of closing. So they have to be more recent. Could be that.
Sometimes it's also quality of the document. If it's too blurry, it won't be accepted. Even if maybe to the human eye, it's still legible. If it's a certain amount of blurry, they need a better copy. I guess probably that's kind of like a fraud prevention.
Yep. And if it's
also
downloaded, uploaded through so many people, at the person that actually needs it the most doesn't get the document in its highest quality form. Anything else?
There could be like a 2-part to something where, we knew someone was going to use 401k funds. So we asked to see that account listed out, or what of that account you were going to use. Well, now the processor needs the check that matches that and the statement that matches that. So they may ask for one piece of that puzzle in addition to 2 other pieces. So we have one, but we need the other 2. So it was all in one question, but we do have some of the pieces.
And so a lot of times it's a lack. Sometimes it is truly like the wires didn't like they got crossed like too quickly. Like I had, like they sent it to me in my text. Like that's the last place we want our documents is in my text. Because if I'm at a meeting and Judy, our processor, just got an underwriting approval and she wants to get out the list to the borrowers quickly and I have it in my text, then that can happen, you know? So sometimes things like that could happen, but
we try to prevent that, but it's just kind of like the result of having a lot of people working on the same file, you know?
Yeah. One of our realtor friends does say, she explains it to her clients, and Grace said this earlier, but our friend does this really well. She's like, getting a mortgage is like someone opening your underwear drawer, picking up each pair of your underwear and like examining them, and just like kind of like commenting and maybe criticizing or making any type of comments. And that's how people can feel. And we did talk about that, but we know your whole life story. I mean, we have your entire credit history from the time you ever got your first piece of credit until present. We know your job history. We know your address history. We know your assets. We know your spending habits and behavior. So it is we know a lot, and all of those things looked at together, it determines like how well you may pay a mortgage or how willing or able you are to do that.
Stacy, it's a good thing to tell your clients. It's the most tedious process and to just grin and bear it. But
yeah, like just have fun with it.
It really is have fun. I would love to figure out how to make it like fun. But it's like, hopefully in a lot of cases it's maybe 30 days, maybe 45 days, and then you're done. You know, it's kind of an intensive period, but it's worth it. We're going to help you get through it as smooth as possible. And yeah, it is temporary.
I do want to address this one. I think people do, like, I think it still stems back from like when there were not as many regulations in the mortgage business, but people also they're scared to be like lied to, or like numbers changing at the very last minute, those types of things, which those are legitimate concerns. So you want to deal with a team that comes highly recommended, check out reviews, that type of thing, because there are definitely some like bad eggs in the business. But you know, your numbers, there should be good communication as to what your payment and funds needed at closing is, and it should really not change much. And if it does, it should be communicated extremely fast if there's a major change. There's that. That's what I had on my list. And then some people do, I don't know why I had this on here, but I know some people like kind of refuse to get pre-approved before they see a house. And then because either they're scared and in denial that they might not get qualified, or they just know in their heads or think in their heads that they will qualify. So like, why do they need to get pre-approved? And what I can say is that a lot of people have lost getting the house that they really wanted because they didn't take that step first.
I would say that actually happens fairly often with self-employed borrowers, only because they might only file so much income, but maybe they actually are, you know, in their everyday life bringing in a lot more money than is on paper. And so they think, well, of course I can buy this house, but then we'll get the tax documents, and sometimes it's a very different story on paper, not all the time. But it is hard because sometimes we'll set expectations for ourselves that we definitely qualify for something, and then, you know, the paperwork is so important, you know, in actually issuing a strong pre-approval that's not going to fall apart later on. And that's really important to us, that we're issuing pre-approvals that don't fall apart. So
let's talk about this one. So a lot of people we get this comment a lot, especially from agents, that underwriters are a bit overzealous. So, their license, their job and license is on the line, and it's tracked whether or not the loan performs. So, underwriters do not by any means mean to be overzealous or ask for too much information, but they are tracked on the loan performance. So, I mean, if I was an underwriter, you have to be careful of giving someone a loan that clearly isn't going to be able to pay it, or it's okay to ask for additional information to feel comfortable that the borrowers are going to be able to repay the loan. They're asking for additional information because they have some doubt somewhere that this person, based on their past behavior or everything they're looking at in a file, that they may not be able to repay the loan. So I understand that. And I always go back to, like, what if it was my $600,000? I would want every piece of information I could possibly get from anyone to give me the utmost confidence that this borrower can repay this loan. So I think about it in that way. But I think for the most part, underwriters, at least the ones that we work with, they can, sometimes they can be black and white, but with a conversation and an explanation, they can have a better understanding. So you have to have a good loan officer that can work well with an underwriter. That's something that I want to touch on. I think we have great underwriters, but you have to put yourself in their shoes. They're good. They may be scrutinized for writing a loan that ended up in default. So they have a lot on the line.
That's even just a good reminder for me today,
Yeah.
just to remind, you kind of think of underwriters as maybe not having skin in the game and they're just being difficult, but it's just not the reality.
No, that's their character on the line.
Yeah.
So I respect underwriters. We work with a lot of great underwriters, common sense people. But if it was your $600, you'd be pretty protective of it, and that's their job for the bank.
Yeah.
So,
and that's similar for, like, your loans are tracked for years to come, and then processors, I think too, they're also tracked. Is that accurate?
So my NMLS number, it depends on if they have an NMLS number, but if I've originated a loan that goes in default, it's tracked by my NMLS number. So of course, like, I don't want bad performance on loans that I originate either. I don't want fraud to come up on my NMLS number. I don't want default, and either do underwriters. So great point.
Laurel has a good question. This comes in two parts. Why do they use the lower of the middle credit scores, than just averaging the two scores? It goes on to say, I've had buyers get very frustrated that they have to use the one buyer's lower score while the other one has very good credit.
Lending in most cases takes the most conservative approach, and it just goes back to, like, we're going to lend to the highest risk. So the person with the lowest score is the highest risk. So we are going to base it on that. And that's the conservative nature of mortgage lending. Does that explain it well enough, do you think?
I would say so. Yeah.
Okay.
And then Stacy says, many people think that the mortgage estimates on Zillow are accurate, so they think that they can afford it. I have pointed out to many that number reflects a 20% down payment and is missing mortgage insurance, homeowners insurance, and normally the taxes are incorrect. Yes, I've seen this. Not to mention that the rate is not guaranteed. Definitely.
You said it all right there, Stacy. I have done videos on that topic. We get that a lot. Like, they come expecting a payment and they're in sticker shock because they're putting 3% down, but the loan scenario online is always assuming they're assuming A++ credit. They're assuming like 30% down, and then again, maybe taxes and insurance probably is underestimated for marketing purposes to get people to call on that property. So yeah, that is a thing. And a lot of things in this business are marketing, and then you get into like the real stuff, and it looks different than how it's marketed. Appraisals. I want to touch on this one. So someone was very passionate about the appraisal process. So again, it's the same old line. But appraisers do not work. So this person said that he despises how appraisers have control over if the transaction like works out or not, or how like one person can have that much control to say whether the buyer should pay more or not. So I need to back that up a little bit, because appraisers are very important in keeping risk mitigated in mortgage lending, and there's some reasons why. So if a lender base it, the collateral is their investment. So if we talk this through, and if someone is willing, let's just say this: consumers may not always be the best decision makers, right? They might just want the house, but they may not be making a good financial decision. So let's start there. But it's the bank's investment, because the bank probably they have 90% of the skin in the game, 95% of the skin in the game, 97% of the skin in the game, but usually at least 80% of the skin in the game, right? So just because a buyer agrees or wants to pay $20,000, $30,000, $40,000 extra does not mean that is the market value of the property. So a lender is not going to lend on more than the market value of the property. It puts them too much at risk. Imagine a lender doing that repeatedly and losing $400,000, $700,000 a pop. They would go under in no time. So the value is very important. The market value is very important to the lender, because lenders have to think in worst case scenarios. If a borrower loses their job, if there's a death of one of the borrowers, anything, right? And that mortgage cannot be repaid, the lender has to be able to unload that property quickly. So if they have based it on the price that maybe a bad decision by a consumer has made, then they're not protecting their investment, their profitability, their liquidity, all of those things. So the appraisal is an extremely important part of the risk mitigation in lending. I can't stress that enough. And their license are on the line too. So they are not going to, and since the mortgage meltdown, it's a lot more difficult to become an appraiser. And we have almost no new appraisers coming into the market. So their any default goes on, is tracked by all of these people on this transaction. So put yourself in the lender's shoes. It's just, an appraisal is very important. I don't think there's more to say about that, but that was something
that was really good, by the way.
So lack of understanding is a big one. I think if people understood more, then they would be less frustrated. It is hard because people go through this process on average like once every 7 years. So even by the time you do your next mortgage, things have changed. So there's that. That's something that we deal with. But I can say from our team, like we try to be as communicative as possible. And I even say, like, let's over communicate. Let's just like beat the heck out of this communication, because it's better than not communicating enough. So anything else we want to say? Let's see. Did we cover all the comments in there?
Yeah, we've got all our questions.
This is one thing I wanted to bring up. Somebody commented yesterday on a post I made about like why do people hate the mortgage process? The person said, great question. But he also said he often sees loan officers pre-approving buyers who are not willing and able to buy in today's housing market. So I agree. That should not be happening. We can't we can't change the mortgage world, unfortunately, but we can just do our best on our own team. But it is very important as a buyer, I would say, you have to know, don't just be excited you got pre-approved. You need to at least ask, like, okay, I'm pre-approved for $350,000. What does this look like? How much money do I need at closing? And what is my total monthly payment going to be? Because if you go out shopping just because you're pre-approved and you don't have those two things in your head, then it's pointless. And you're probably going to end up very disappointed, wasting your time, other people's time, and end up maybe in sticker shock by the time you find the house of your dreams. So yeah. I don't know why loan officer would do that. I certainly don't. We have a buyer's consultation with every buyer that gets pre-approved, and those are the two major things I make sure that we go over. So I don't know why that happens, and I think it's terrible.
Yeah, especially like I would almost be extra cautious about that in this market, with rising interest rates. Maybe you're sitting on a pre-approval you got a couple months ago, but now that could look really different, depending, totally unique to the borrower.
Real estate agents, like if I was an agent, I would make it my business to understand the mortgage pre-approval so that I can conserve my time. So how much did your lender say you need when you close? And what if they're like, oh, I don't know. then you can, kind of make them turn around and go get more information before you spend hours of your weekend or multiple weekends spending time with people. And the motivation to buy, I agree. I don't think people should be out in this market if they're not motivated to buy. And we assess their motivation level at the very beginning. I say, what is your likelihood that you'll buy if you're pre-approved today and you find a house you like, what's your likelihood you'll buy in the next 120 days? So, and I say on a scale of 1 to 10. So I get a really good sense of if people are motivated to buy.
Stacy says, I feel like an example worksheet with a current home on the market that meets their needs prior to shopping would help with that. I guess that
we definitely go over that with them. That's a good idea.
Yeah.
Thank you for that.
Yeah, a lot of times one of our questions is like, where exactly are you looking? Do you have a property in mind? Because then we can look at that property, those taxes, that monthly payment specifically. We do try to get as specific as possible to be as real as possible for everyone right up front.
Especially if they're maybe like selling a house that they bought for way less money 15 years ago, and now to get a house that is the same size or even smaller might cost them more, than the house that they're moving out of. So it's just like, I don't know. It's kind of sad to see people come to that realization, like, oh, what I'm leaving is not what I'm going to be getting necessarily.
So somebody outlined why he thinks that people hate the mortgage process, and he said fear, which I think we covered. He said lack of education, which I think is true. So seek to get educated, I think, is a good thing as a buyer. So if I am an educator by nature, like I want to educate. That's probably my very favorite space to be in. So maybe you should seek out a loan officer that has that educational component to what they do. And then misinformation is another one that he said. So people listening to family and friends and coworkers, I think a lot of times creates just so much misinformation about so many things in the real estate and mortgage industry that it'd be better to get a good referral and talk to someone that you trust in real estate and mortgage, and maybe turn all the rest of the noise off, because you're going to get so many opinions and so much misinformation that it would be better if you just got it from the professionals. Obviously someone that you trust, so that you know that you're getting good information and that you can trust their word and all of that. But
Yeah.
definitely.
Stacy wanted us to know, I'm not saying that you don't. You guys are great. I'm saying the
Oh,
agent
I know. I was trying to think of how to answer you.
Oh yeah. No. Saying the agent should ask for the lender to provide that. It's the agent's job to get that information for the buyer. So good to have an educated agent too. Super important.
Yes, for sure. Someone said so why do people hate the mortgage process? Someone said it's a huge commitment. And I think that kind of goes with the fear part of things.
I think someone last week, I'm trying to remember, someone was saying last week that when they were under contract, it felt like a part-time job,
Oh my God.
For that month or however long it was.
And it depends on how complicated your situation is too, and what type of property you're buying. So a condo has more information that we need to get. If you're getting gifts and transfers and all that kind of thing, that's going to create more chasing of paperwork. If you're self-employed, that's going to create some additional things over and above just what your standard salaried worker would bring. So, I mean, the easiest files that we do are salaried workers that have been there 2 years or more that have low debt and a lot of money. So that is that is the easiest file that we work on. And those ones, take a lot less documentation. But we are no stranger to, working on all of the other kinds of files as well. Just trying to scroll through here. Knowledge, trusting, paperwork. Credit has to be maintained through the process so that somebody said cognitive dissonance. I kind of looked that up. That was
is that
it's bad feelings about it? I think
cognitive dissonance is kind of like denial a little bit. Like, what is it? You're saying one thing, but you feel another. Let me Google it for us.
Yeah, it says the state of having inconsistent thoughts, beliefs, or attitudes, especially as relating to behavioral decisions and attitude change.
Okay, got it. I want to be someone that could just use that in a normal sentence.
I think that was a song back in the 90s. Something about cognitive dissonance. Somebody chime in.
Oh.
Unknown and lack of education, the last minute fire drill, stress for sure. It's the most stressful transaction that you make in your life. So there's just bound to be some stress related feelings that go along with it. But with a good team, I think at times we're counselors, so we can help you kind of manage the stress and help you feel less overwhelmed with the process. I'm the kind of person that likes to take it step by step as not to overwhelm. Lack of communication, that's a big one. Stress, expectations, explaining the process, general stress. Redundancy, we talked about that.
Yes.
Someone said trying to get documents where you have no idea where they are. That's
real. That is
real.
That took me a while to find, even like a W-2 recently.
Yeah. And then sometimes people are like, I don't have it. And we can give you some steps to take to try to get it. I've helped people. I've done posts on Facebook before that says does anyone have a contact at ADP? And I got somebody's W-2 for them. So,
wow.
We try to be extremely resourceful. So why does the process always seem to be wait until 10 days before closing? And oh my God, we need docs now. So sometimes that goes along with that quality assurance check that they purposely wait to make sure everything is intact as close to settlement as possible. And nobody understands that. Nobody would even think of it, but that's the reason why. Because a lot of people think they can get around the system, right? And get their furniture 2 days before closing. So they think they waited long enough, but no, don't do that.
It's very calculated. There are reasons for how far out they do these things. Denise,
Jobs too. We talked
Yep.
about it, but I'm just kind of repeating.
Denise said, definitely. I tell buyers to lean on you as a financial advisor for getting positioned the best to buy a house. That is so
For
kind.
sure. Having to show the same docs several times. So, last minute request for documents. We talked about those. People get confused and it's overwhelming. So that's for sure. It's hard to understand the way mortgages work in just one transaction. You know, it's my field of my career. So, but it's a very confusing process with very confusing information. So some people I think choose not to try to understand it and just rely on us as the experts. And then we have some clients who really do want to understand it. So we kind of meet you where you want to be as far as how much of an understanding that you want. But some people just can't. They don't want that information. They can't handle it. It's confusing. Their brain is going to blow up, and they just rely on us to help them get to where they need to be.
Both are welcome. We will help you.
So I think that we've covered everything that we all had and more. So hopefully this is helpful.
Yeah, I had 7 reasons and we somehow touched on all of them. So
good.
This was comprehensive.
I had 5.
If you have more, or if anyone watching has more, then we could do a one-off video. I need to do a video this week, so let me know what you need to know and I'll get it together.
Yeah, I'm sure the list is endless. So
what do we have? What's next?
Yeah. Carly, what do we have?
So, because home buying can be kind of frustrating, it may need a cocktail to get you through the experience. So this week we're giving away a little cocktail basket. This is a little shaker. I'm trying to move it in the right direction.
And Carly designed this basket.
This
is
basket is so good.
Yes.
You're talented. Make me.
I had some fun with that one.
Can you do a close up of that shaker? Because it doesn't like have the recipes on it or something?
Yeah, it does, and it's like a frosty glass, and it tells you all the ounces you need for like 10 drinks. I think. 8
Amazing.
Drinks. Yeah, isn't that so
cool? Whatever cocktail you need to get you through the mortgage process, you have right on that shaker.
Yes. So if you want this basket, please like this video, share this video, and comment on this video. You can comment whatever you want this week because we covered a lot. You can talk about why you say whatever. Just say hi. We'll say hi back. So
put an emoji or something.
Yeah. And then we have a giveaway for last week, which I'm excited about.
What is your giveaway from last week? Oh, I remember being Wawa.
Yeah, Wawa gift card, or you could get a beautiful 2024 Rifle Paper Company planner, which is not actually in this color, but it's the same. You get the gist. This is what it looks like.
Pretty.
It's just as pretty, and there's color options. So we're gonna draw a winner for that. I'm gonna pull up my wheel so you guys talk amongst yourselves real quick.
Okay. We're just gonna watch you, Grace.
Yep. All eyes on Grace.
Okay.
Okay, you can see this wheel.
What we got here?
Mm-hmm. Okay. I'm gonna zoom in. Alrighty. I'm so excited. Who's gonna get and what are they gonna pick? Glenda!
Oh, Glenda! Let us know what you want. I'm so excited.
Yay! I'm excited for you. Glenda's been a regular attendee on our shows recently, so we're super happy for her.
And a past client, Glenda.
Yeah. Enjoying your home, I hope. Okay, awesome. So we'll get that to you.
Fun.
Yes, this was fun. I guess I'll talk to you guys soon.
I really think so. Bye.
Bye.
Yeah.